All right. I have to say, after so many years of struggling, if you've been in Alberta or Saskatchewan, it's finally nice to be on the other side of that. For years I've been coming up and talking to audiences and being like, yeah, but unfortunately we're in Alberta or we're in Saskatchewan and it's been different. Now it's starting to feel a little bit better despite what's happening. So I want to start off just talking about why this matters and what they're talking about in terms of a recession. Now we've seen, so what I've done here is I've kind of highlighted really going back, because we haven't seen inflation like this since the 70s, 80s. So for economists, we're like, okay, what happened back then? And trying to look through the different cycles and really what does it mean and why are we seeing what happening? So there's a lot going on in this graph, sorry about that, that's more for my sake. But what I tried to do is take a look at the different cycles and what it meant from peak to trough, right? So when did we finally recover and what it was. So what we're seeing now is that, we are in this higher inflationary period, nothing that we've seen since the Bank of Canada started inflation targeting back in the 90s. So going back, when was the last time we saw this? In the early 70s. Well, what they're trying to do, so now the Bank of Canada is very concerned about having these higher inflation, what that means for the overall economy. So that's why we're seeing rising rates. They're trying to avoid the type of recession that we had back in the 90s, early 90s, into the 80s. They're trying to avoid those long periods of recession that are caused when you have inflation out of control. So that's why they're doing the front loading now. That's why you're seeing those rates coming up really high very quickly, because they're trying to avoid that. Now, and another reason why they want to do it now is because we're sitting at some of the lowest unemployment rates we've seen. So they're weighing out that pain today would be far less than if they let inflation go and wait longer, then we could have a much more severe recession. So that's why they're doing what they're doing. It doesn't mean we like it, right? There's no question. The higher inflation and the rising rates, it's tough, and it's going to impact the housing market. We can't get away from that. Higher lending costs, like not too many people are buying cash for their homes, so that higher lending cost will impact demand on housing. There's no question. What I am grateful for is that we're in a far different situation here than other parts of the province, even if you look at what kind of happened. So I think, you're hearing so much about the housing correction and what does that mean? Well, you need some perspective on this, just coming from where we were. So if we think back, I always like to reference 2014, because that's when the energy market first came down, so we saw the impacts in Alberta and Saskatchewan over that time frame. Well, our markets over that time frame in Saskatoon and Regina weren't seeing price growth, right? So we had prices that were generally coming down, whereas the rest of the country and some of our bigger markets had significant price gains throughout that time frame. So this is before the pandemic, right? So we saw prices slide over that time frame. Whereas, those markets were seeing gains, double-digit price growth, right? We didn't see that, right? Now, we fast forward, the pandemic, everyone saw that benefit, okay? Everyone saw that people were buying more homes, really low lending rates brought a lot more people into the market. So yes, we had price appreciation in both of your major markets and the province as a whole. Saw that price growth as well. But again, look at the relative price growth. We weren't having in this market 30% price growth. You just didn't have that here. So things were a little bit slower to come up because we came from a situation where it wasn't undersupplied. People had some options, so it took a lot longer before we saw that appreciation as opposed to what you saw happening in both Vancouver and in Toronto areas. So even now when we're going through this adjustment, so you've been hearing a lot on the news talking about the pullback that we're seeing in sales and this adjustment that we're seeing in other markets. Again, I want to point out, look at the difference. You have markets like Vancouver and Toronto that are seeing their sales drop by over 40%. We're not having that here. So it makes, yes, it might feel a little harder to see some sales activity slow, but it's not what you're going through in those markets. And I think that is one of the big differences when we think about this and how our market evolves, is understanding the differences of where we came from. So while we're seeing some adjustments, there's no question you've seen a pullback in sales in your bigger markets for sure. You've also seen a pullback in listings. It's not to the same extent. And I think that will continue to be the case as we move forward. You're not going to see that same level of retraction as you are in those bigger markets, because as Mike put it, we didn't go up in the same way, right? So you didn't have that same big boost to begin with, so you're not seeing that same level of pullback. Now, that doesn't mean that you're not going to still see some effects, and I'm going to get into that a little bit more. Now, when we think about what's happening, one thing to again point out is that while there is a recession that's expected, and again, I use RBC forecasts all the time, so they're expecting a national recession. They're going to have 2 quarters is what they're currently saying. It could change, no question. But I want to point out, look at the difference. Saskatchewan is not expected to do that. We're still expected to be in positive territory. You're going to lead the country in growth, right? Now, what does that mean? That just means you're in a better situation than most other provinces. And that's a nice place to be at after everything that we've gone through over the past several years. Now, why is that? So what makes Saskatchewan different? The reality is commodities, right? And we're not just talking oil and gas, we're talking the potash sector, you're talking your agriculture sector. All of those sectors will help you get through this time. You're in a good situation, you have a lot of commodities, that will help. That supports a much stronger sort of economic condition here than what you're seeing in the rest of the country. When it comes to housing, though, one of those things that I like to look at, that's great. It's good to see that your economy is better. What about your population flows? Because we know you need people here. That's how it supports demand as we move forward. Now, on the whole, you are seeing people still leave. Interprovincial migration is still negative. It's not as bad as what it has been, but there's still more people leaving this province. So again, if you think about what do you need to do, you need to keep people here. You need to keep people coming into this province. Like, you've had a boost in international migration, especially in the last quarter. You can see if you look at that green bar on the top there, you've actually seen a big boost of people coming into your province. You got to retain them, right? So you need to keep them here. So when I look at this, overall population growth is expected to range in that 1% next year. It's a good thing in terms of helping offset some of the impacts of higher lending rates will have on the market. It's good that you still have some population growth, you still have people here. It can help support demand at a certain level. It's not going to completely offset it, though. Okay, so I still expect to see that sales activity will slow next year. I would prefer to see your interprovincial migration turn around before I'd have a lot more confidence in what you look like moving forward. But at least you're not in a situation where you're having overall negative growth. So you still have population growth, just at a better pace than what we saw through the pandemic. Okay, you're having a return of those international migrants. Now, a lot of those international migrants do not directly go into ownership. Typically, they start in rental, right? And we are already seeing some of that in the rental market. We're seeing vacancy rates start to come off from their highs of where they were. They're not necessarily at record lows. You get differences between Saskatoon and Regina for sure, but it will start off in the rental market, and if you can retain them, that eventually turns into ownership demand as well. Another factor when I look at your market is what's happening in employment. So everyone went through this big drop off in employment through the pandemic. This is pretty standard no matter where you look at, but you guys have recovered. You've gained back all the jobs that were lost. Slightly different sectors, which we'll talk about in a second. But you're in a pretty good situation in terms of employment and overall unemployment levels. They're very low. That helps provide a cushion. So you've had over 3% gain is expected this year in terms of overall employment. Now, next year, employment is expected to level off. That is actually a good thing. When you think about the expected job losses that are going to happen in the rest of the country, that's not expected here. So again, when I think about how we look moving forward, yes, you'll still have some slower demand, but that's one of those things that's going to help offset some of that impact. It's still going to keep some people in the market. It doesn't mean that you're coming crashing down. You have a fairly stable employment sector, and that'll support demand, but obviously at a lower level. Okay, so it's one of those things that's why I don't expect to see a dramatic decline in terms of overall sales activity as we move into next year. So what sectors are people working in? Well, what we've seen is that you've actually had job growth that's been fairly broad-based. You have had struggles in terms of the agriculture sector. That's where you've seen some job losses. I would argue some of that is to do with a lack of people. You just can't find people in those positions, so it's showing up as a decline. You're seeing it also in the forestry, oil and gas sector as well. You're seeing some pullbacks there, as well as some of the business sectors. Now, that is again part because you've got job shortages. Now, this is a problem across the country. We're seeing a lot of job shortages. And in Saskatchewan, I think the recent estimate is over 24,000 jobs that haven't gone filled, right? You need to fill these jobs, you need to get those opportunities. Now, it also provides some cushion. So again, if you're going through a correction, having those vacancies still in place, that means that you'll feel less of an impact as you move into next year, as people, readjust. Now, despite having some adjustments, there's not all sectors have fully recovered. So we know that there's certain areas of the market that have struggled as well with job vacancies, especially in accommodation and food. That is across the country, that we're seeing really high job vacancies in that level. Even though you've had job growth, it hasn't offset what was lost prior to the pandemic. But we're seeing gains in other areas that I'd like to see. So the fact that we're seeing some gains in your professional, scientific, and technical, your finance, insurance, real estate, those areas, that is a good news in terms of you think about what supports housing demand. You want to tend to see the better paid industries growing because those tend to influence ownership demand as we move forward. Now, what does it all mean for sales? There's a couple things I've been looking at with your data. Now, you've already started to see sales pull back from record high levels. So you have to put some context to that. When people are like, well, sales are falling, but look how strong you were. You haven't, that was a really exceptionally strong level of demand. And even though we're pulling back, one thing I would have to say is that you're still gonna be better than everything that you dealt with prior to the pandemic. In that pre-COVID period where we're seeing a lot of outflows in terms of interprovincial, you were struggling because of a weaker energy sector and potash markets. Those situations today aren't as bad as they were, right? So you have a better agricultural industry, you have a better oil and gas sector because of higher prices. You have a better potash sector. All of those things is why I do believe that while sales will come down, you're not gonna go back to some of those lower periods that you had prior to the pandemic. That's one of the key differences. You're in a better situation today than you were then. Okay, same story in Alberta, right? It's been one of those consistent things. It's like, I feel like, yeah, we're going into a recession. We've had worse. That was like what we had to deal with back then with all the job losses that we had throughout that time frame is far worse than what we're seeing today in our provinces. Okay, now another thing that I've been kind of puzzling out of my mind a bit is about what's been happening on your sales versus new listings. So what's interesting is that, you've had that pullback in sales. Most of that pullback has come from the lower end of the market. Now, I'd argue some of that is because there just isn't enough listings there. So you've seen a pullback in listings in all the lower end of the market, and that's something that could be restricting some of those sales. Just there isn't that supply choice. Because what's interesting is, despite higher rates, you still had supply growth for homes that are priced over $500,000. Except for the really high end. So if you look at the upper end, but you've had sales growth because there was listings there. So I think one thing that we'll see as we move forward as well is where will that supply come on, right? We do tend to see that when markets slow, that listings start to pick up. You see supply levels rise. Are they going to start coming at the lower end of the market? Because that has been a bit of a challenge. I would argue that you might have not have seen as much of a decline in sales as you have so far this year, in part because you just didn't have that supply choice. So that's something that I would continue to kind of monitor as we look at the next year and seeing where is that supply going to come from, at what price range are those supplies coming on, and could it be that all those people that still want to get into that sector, there'll still be some demand there if they can start to see some supply. Okay, so that's something that I really am going to be watching for as we look in the next year. Now, in terms of some of the other key things. Everyone knows I do tend to like that months of supply number because it really tells me what is that balance in the market between supply and demand, which is this green line here. Look at how you dropped through COVID, okay? This is probably some of the tighter conditions that we've seen for a very long time. Now, let's put some context to that. If we look through that period of 2019, 18, all that time frame there, you tended to have more supply than demand at that time frame. That's why prices were generally trending down over those past several years, really since 2014. But now you're sitting at conditions that are far tighter than what we had before that. So what does that do? That provides cushion. So when we think about the impact on price, when you have that things that are still really quite tight for your province compared to what we're used to, that's one of those factors that tells me, well, I'm not expecting a giant slide in your prices because you're not in a situation where you're really well oversupplied, right? You're still on the tighter side of market balance. Right? You're really approaching what's more of a balanced level. You're not quite there yet. And it's why you continue to see price growth this year, is because you don't have a lot of supply relative to the demand in the market. Now, as we move forward, and I do expect that demand will start to cool, we should see conditions become more balanced. And of course, the only other challenge with that is because of the concerns over the overall economy and what's going to happen in a recession. You got some consumer confidence that's a little bit, consumers are a little nervous and they're concerned about, well, they hear on the news, there's going to be a 30% price correction from peak to trough. Well, what does that mean? Well, they don't want to buy now, so they might hold off, right? We are seeing a bit of that activity, and that can impact prices. But I would argue that you had prices going up far faster than what is typical, right? Especially if we think about what happened last year. I mean, you have an 8% price growth. That's not really typically normal. We would like to see those levels come back to something more normal. We'll likely start to see some of those adjustments because you overshot, right? And again, this is very common in most of the markets. They did overshoot a bit of those increases. So we do expect that to kind of come back as we move into next year, as you start to hit more balanced conditions. So how do you get there? So we know that obviously adjustments in demand is one way. Another thing to consider is what's happening in terms of supply. I have been saying for a long time, supply is a bit of a challenge. So if you look at this graph on the right, and this is really meant to kind of tell you a bit about just what's happened in your supply, it has come off from those highs. Now, are you at record lows? No. The reason why your market is as tight as it is because the demand has been so strong. But that being said, supply has definitely come off. Now, when you think about new supply, you tend to have listings when prices increase, right? As prices start to rise, people go, oh, now's a great time to sell my home and adjust, right? So you might not get a lot from the listing side. We've seen listings have been pulling off. This is where the new home guides also come in. What has been on the starts? We've seen that starts activity in this province have improved. They're not at record highs, so your builders have been much more cautious. What's interesting to me, though, is look at where the starts have been. A lot of them have been on that multifamily side. A lot of apartment starts. Now, what's interesting about the apartment starts is most of them are rental. I think that's where there has been a big shift. We've seen a lot of construction and rental. And so that tells me that while their improving starts can help with the supply situation as we move into next year, if most of that is rental, it doesn't mean all of a sudden you're going to have a well oversupplied ownership market. And I think that is another thing to note. I mean, typically we see in our markets, because we do have land, that as builders start to go, we see a lot more supply come on, then that can impact the resale market as well. Now in this case, because most of it's been rental, it's a little different. So I'm not expecting the same jump up in supply that you might have, if those were just all, let's say, detached starts, okay? Now, again, part of that increase in supply being rental is really a point to say that the fact that you have all that international migration come in, there's almost like a recognition that you need to put them somewhere, and they typically start in rental, and we're seeing that reaction. So on the whole, I look at this and think this is actually a good thing when we think about what the impacts are, and are we going to move into a market that's really shifts away from balanced into buyer's territory, because that's generally what you want to avoid. You want to avoid that sort of buyer's market conditions. There's nothing here that's telling me at the moment that we are clearly moving into a buyer's market where you're going to have strong price declines. That's not what I'm seeing. I'm seeing every indicator is pointing towards more balanced conditions, which should support at least stability in prices, right? You could still have some adjustments depending on location, no question. We could also continue to see shifts. One challenge is when you're looking at average prices, is our average prices declining because of what's being sold? If you have a shift towards more affordable product, that can cause your average price to decline. Now, on the whole, we are seeing things trend down, not really unseasonally, so it's very typical with the seasonal adjustment that we're seeing. So prices are still in that higher level, but this is going to be an important factor as we think forward, right, and what the implications are. So on the whole, I'm looking at supply thinking, that's not a bad situation that we're in. Now, as we move into more balanced conditions, though, this should start to cool that level of price growth. Okay, so we had exceptionally strong price growth in 2021. We've seen those levels already come off now, but the market is still fairly tight. So as we move into balance, what will happen on that price? Well, I think just confidence alone is one of those factors that's going to really prevent prices from really, it could cause it to really go one of the two ways, right? So I don't expect as much growth in terms of prices next year. Could it slip a bit? Possibly, especially if we think early in the spring. No question the higher rates are also impacting what people can afford. And you're having less of that bidding war activity, all that other stuff that was happening that caused some of the price gains in the first place. So when I think about what we do as we move forward, I really feel we're moving into a market that should be better balanced, much more normal conditions for you, and in a market really where prices are going to start to at least level off next year. I'm not sure I'm quite in the camp of that they're going to fully decline. I think that because there isn't a lot of supply, you can avoid that. Now, obviously, you might have some differences depending on the market that you're in and what you're dealing with, but I think we are in a position where you're just going to see prices start to slow, so you won't have much growth next year, but it's not the same as a full-on correction. Okay, and I think that is what some of the difference is. While you might give up some of those gains slightly, it's not a full back to where we were, right? And I think even on the national context, if you look at even some of these corrections, they talk about the adjustment peak to trough. Most markets, despite what's being forecasted, is still expected that prices are still higher than what they were prior to COVID. So they're not giving up all the COVID gains. And I think that's another distinction to make. And in Saskatchewan, I just don't see that. In terms of different locations, one thing I want to point out, and I looked at Saskatoon and Regina, you do have different trends depending on the two markets. Saskatoon has generally had stronger employment growth, right? So you had stronger employment growth than what you've seen in Regina. Regina had some job losses in some sectors. And you know what? You see differences between the two markets. So Saskatoon has been far more challenged in terms of supply than what you saw in Regina, right? So this market has been far tighter. Inventory levels have come down. Obviously demand was much stronger. Similar trend in that way to Regina, but what I did see the difference is that, your months of supply is pretty low. Saskatoon especially, and that's why you've had stronger price gains in Saskatoon than what you've had in Regina, okay? Because you've had some much stronger demand relative to the supply coming on the market. Now, starts have actually increased here. So the majority of starts that we're seeing improve has actually happened in Saskatoon over Regina. So Saskatoon has seen a big pickup in starts. A lot of them, again, I think we're at 2,000 units currently, which is pretty strong for your market. Over half of that is apartments. And of the apartments, I think 90% are rental. So again, you're seeing a lot of that rental construction happen in Saskatoon, more so in other markets. So again, when we think about what does that mean moving forward, well, if the supply is coming on mostly going to be rental, then again, are you going to really have that big shift and that you're going to see that big pickup in supply? Not really. Okay, so I do expect that demand will cool your market a bit, but again, just moving into a balanced sort of field, somewhere you haven't been for some time. Now Regina, again, trends look really similar here, but one of the big differences, it took longer in Regina. You didn't see the pickup as quickly because you started off in a position where there was more supply and that market's starting off. So when we did see the pickup in demand, you had more supply to meet it. So yes, you've seen the months of supply recently come down. It was more so this year. We're seeing tighter conditions than we have had. That was mostly this year that we saw that big drop. And last year, but you're still not it's not as bad as what we kind of was before. So if we think about how low that months of supply, you're not at record lows. You're really in a much more normal sort of territory in terms of Regina, and you have seen some pickup. Sales are still increasing there. So you didn't have a pullback in sales so far this year. Year to date, sales are still higher in Regina than they were last year. And last year was, I believe, a record year as well. So you haven't had that same pullback because there's been supply there. So again, when I think about your market, and I question when we're seeing these declines in sales, going how much of that decline in sales is because there isn't the product people want? There isn't that available supply that they're looking for. Is that what's holding back some of your sales? Not just the interest rates, because you're far more affordable than a lot of other places. So, and interest rates, despite them rising, I mean, it's definitely tough for people who've never seen rates like this, especially over the past 10 years. But historically, they're still not that bad. and for a market that is not as concerned in terms of affordability, it has less of an impact than it would for a market that's higher priced, right? So I think when we look at those things, I still see a lot of positives in the Saskatchewan market. And I think that if some of that supply comes, you're gonna see sales, yes, it's gonna come down a bit. There's no question, especially it depends on how high rates will go. That's one of the key things I'm watching for. Don't forget, there's also the qualification above the rates. So if rates move into that 4% range from Bank of Canada, what does that mean for actual mortgage rates? And what does that mean for qualification? I mean, I'm understanding that you're having to qualify closer to 7% today. So that is a bit of a difference. It changes what people can do. But if that supply is there, I wouldn't be surprised that you'll start to see some of that demand play out as well, because people haven't been able to find product. When you look at the other regions now, there's been a lot of similar trends. So I've been seeing similar things happen regardless of the region in Saskatchewan. We're seeing trends are generally much tighter than they were. You've had some price growth that has, been, if we think about, like, Melfort's the only reason, the Melfort area has the only area that has seen average prices come down, but it's not offset all the gains that we've seen, okay? So some of that I wonder if it's just compositional shifts, just ability to sell in that market, what is available. But on the whole, we're seeing that for the most part, most markets are far tighter than they were prior to the pandemic. Okay, you're in a better situation. That gives you cushion, okay? And that's really what's important if we think about when we move forward. If you're seeing adjustments in demand and you're seeing any of these changes, this is why I would say don't expect that same level of correction as you might see in other markets, because you're not other markets. You haven't had that same sort of imbalance that other markets have seen. And I think as we move forward, that'll be one of the factors that'll help you. With that, I'm happy to, I think Mike's coming up again, and we'll have to talk, and I'd like to take some questions. Obviously, the biggest concern I have in terms of risk is how high will those rates go? I think we were surprised when they were at, originally, if we think back, forecast was like, oh, they're not gonna go higher than 3%. They'll stop there. Now it's like 4%. I'm more concerned if they hit that 5%. So how much will they have to increase to offset for inflation is, I think, the key risk in the market. If they start pushing off higher, then it'll have more of an impact on demand. So, thank you, and